Good afternoon, everyone. Thank you for joining us. Welcome to today's webinar. My name is Paula McCain, and I'm a Recovery Business Advisor for North Central Texas Small Business Development Center. I don't know if you realized it or not. Today is National Hot Chocolate Day and National Bubble Wrap Appreciation Day. Could it get any better than bubble wrap and hot chocolate? The SBDC is the leading provider of assistance for small businesses. We are grant funded, and because of that, we can offer you our resources and webinars all at no cost. Today, we are going to hear from Angela Robinson. The topic is what to consider when choosing a business structure. If you would, put your questions in the chat room and Angela will get to them, or we'll get to them at the end of the presentation. Welcome, Angela. It's so nice to have you.
Thank you for having me, Paula. Let me get my screen ready to share. Okay. So today's topic, as Paula mentioned, what to consider when choosing your business structure. I want to give special thanks to the North Central Texas SBDC for the opportunity to present this material and topic to you, and hopefully you will find it useful. Just a little background about me. I've been a CPA since 1998. I've been the CEO of Stellar Ledgers for the past 5 years, working as a fractional CFO and controller, consultant, and trainer. I'm also a QuickBooks Pro Advisor and Zero Partner with 20 plus years of corporate accounting, finance, state and federal tax audits, and Big Four public accounting experience. So now for the disclaimer, this presentation and all related materials and Q&A sessions afterwards are provided for educational and informational purposes only. They're not intended to replace any legal or tax advice that you would get from those professions. So the learning topics that we're going to cover today are the common types of business structures, business entity formations. We're going to go over the advantages and disadvantages of each business structure and the federal and state tax consequences of each business structure. And by state, I mean the state of Texas. And Q&A, followed by Q&A. So the 5 types of business structures we'll be talking about today is the sole proprietorship, limited liability company, partnerships, S corporation, and C corporations. These are the most common types that we'll cover today. So the top considerations is not every consideration, but the top ones that you want to keep in mind is ownership. How many owners are going to be involved in the business? That will dictate the type of business structure that you'll have to form. Asset protection, if you have significant personal assets that you may want to protect from possible legal disputes that may generate from the business. And starting out, ease of setup versus complexity may be a top consideration if you want to easily set up a business and not go through lots of complexity. That may be one of your top considerations as well. And also tax implications. How the business is structured is going to dictate how the federal government, the IRS, is going to tax your business. So that's a key consideration as well. So now for the sole proprietorship, what is it exactly? It's an unincorporated business with only one owner. So it's only one person that's the owner of the business. The business and the individual are one and the same. So there's no distinction between the person and the business. And it's not a legal entity. That's important to keep in mind. It's not a legal entity. And it's you should operate under the name of the owner, or you can use a fictitious name and file the name as a DBA, which is doing business as with your local county clerk's office or wherever you intend to do business. So this is generally how you define a sole proprietorship. So how you form one is very simple. You must operate, like I mentioned, under the legal name, and you can go down to the county clerk's office, or they may even have an option for you to do this online now with COVID. To file your DBA in the county clerk's office where your business premise is going to be maintained. And generally, you have to renew this DBA every 10 years. So it's very simple to set up a sole proprietorship compared to some of the others. So now we're going to get into some of the advantages. And I've kind of alluded to some of the advantages already of a sole proprietorship. It's the simplest form of business organization. Very simple to form. It's easier to make decisions with only one owner. There's no division of profits with co-owners. Minimal formalities and government regulations. Now, on to some of the disadvantages. The owner has unlimited personal liability for debts and lawsuits of the business. That's a bummer right there. No stock to sell or equity to offer investors or employees for funding, which a lot of businesses these days need funding, and lenders and investors consider sole proprietors very, very risky in terms of lending. So that's a major disadvantage if you're looking for funding. And the owner cannot raise capital by selling an interest in the business or get business loans. It's not impossible, but for sure you're going to have to personally guarantee that loan. And again, because you and the business are one and the same, your personal assets would be up for grabs if you should happen to default on that loan. And if if the individual dies, it ends the business. You know, you and the business are one and the same, so there's no perpetual life. There's no passing it on to someone. So the business will essentially end with that owner's demise. Okay. So now we're going to talk about partnerships. We'll define what it is and what are some of the advantages and disadvantages of partnerships. So a partnership, unlike a sole proprietorship, is two or more individuals or entities that join to conduct business as co-owners. There are two main types of partnerships we'll talk about: general and limited partnership. General partners that manage the general partnership have unlimited liability, and they share in all of the profits, losses, and debts of the business. Now, limited partnership, you have both general and limited partners. Now, the limited partner is going to limit his control over the business and acts as an investor with limited liability. Unlike the general partner, um, their exposure to debts, losses is going to be limited, unlike the general partner. So, general partnership formation, there's no formal filing or agreement required. The last name of each partner is required, or you can file a DBA similar to a sole proprietorship with the office of the county clerk in each county where the partnership does business. Now, as a best practice, I always recommend that there's a partnership agreement, even if the partners are husband and wife. I still recommend a partnership agreement so that everything is outlined of what the responsibilities are of the partners, how profits are going to be shared. Everything is covered in that written agreement because, you know, marriages do dissolve and partnerships do dissolve, and having that agreement in place is going to be very helpful when these disputes or disagreements come about. I've seen it happen quite a bit. So the limited partnership formation in the state of Texas, you can file a certificate of formation with the Secretary of State for $750. A general or limited partnership, you may opt to register as a limited liability partnership with the Secretary of State, and that requires a $200 fee per partner. Now, this is not mandatory. This is just if you want to have your partnership filed with the Secretary of State, you certainly can do so, and these are the fees to do that. Now, some of the advantages of a partnership: owners can start a partnership relatively easy and inexpensively, similar to a sole proprietorship. The partnerships do not require annual meetings and they require few ongoing formalities, similar to the sole proprietorship. You have an unlimited number of general partners, so it's not capped at a certain amount, um, unlike the S corporation, which we'll talk about later in the presentation. And you have greater financial strength than just one person. So if you partner with other people, they may bring capital, they may bring expertise, they may bring something to the business that you don't have, and together provides a greater financial strength or skill set strength. It's always better, more heads than one. Limited partners have limited liability for any debts, judgments, or other liabilities of the business. So you can opt to be a limited partner so that you can limit your exposure to any debts or judgments or liabilities of the business or from the acts of other partners as well. Okay. So some of the disadvantages: general partners are personally liable for debts, judgments, or other business liabilities that can be seen as a huge disadvantage. Partners may be liable for the negligent acts of the other partner. Okay, so it's a really good idea to know who you're getting in business with. Um, you want to vet that person as much as possible to make sure that they're not exposing you and the business to unnecessary liability and risk. Poorly organized operating partnerships can lead to disagreements and disputes. That's why I favor partnership agreements. Now, you can form a partnership orally. I don't recommend it. I always recommend things being in writing so that you can always refer back in the event of a disagreement or dispute. You have this operating agreement that everyone has agreed to abide by. So that should cut down on some of these disadvantages. Next, we'll talk about the LLC, the limited liability company. Most states recognize, here in the United States, it's a state statute. The owners are members with limited liability protection from the company's debts and obligations. In Texas, this is how you would form an LLC. You would choose a name, and I would recommend before you, let's just say, for instance, you have a unique name that you already have chosen for your business, but you're not quite ready to file just yet. You do have the option here in Texas to reserve the name. So there's little chance that someone else can take the name before you have a chance to get your formation documents. So in Texas, you do have a right to an option to reserve your name, and I forget how many days. It may be 120, but don't quote me on that. So when you're ready to go and form your LLC, you can just pull up the reservation and use the name that you've chosen to be reserved and go ahead on and follow these steps to get your LLC form. So after you've chosen the name, you're going to appoint a registered agent, and you can be your own registered agent. There are companies out here that uh, will offer registered agent services, and basically what that is they'll receive all of your mail, all of your important documents. If there's any lawsuits or court proceedings, they will receive those on your behalf. But you can also be your own registered agent. And then you want to file your certificate of formation with the Texas Secretary of State. The fee is currently $300, and it's a one-time fee. Unlike some other states, namely California, where it's, last I checked, it was $800 and it was an annual fee. And it didn't matter if the business made money or not, it's required to be in good standing in the state of California. So we're lucky here that it's only relatively affordable one-time fee of $300. And you're going to prepare and sign a company operating agreement. That's always recommended. You want to obtain an EIN so that if you hire employees, you want to be able to have that EIN and not use your social security number. You want to be able to open up a business bank account. And so these items are required. They'll ask for your certificate of formation. The bankers usually will just go right on to the Secretary of State website to validate that your LLC is in good standing before you open up your business bank account. And for sure, it's always recommended to have an EIN separate from your social security number, even if you don't have employees right away. But for sure, when you do get ready to hire some, it's going to be required that you get an EIN number. Okay. So next, let's talk about the advantages of the LLC. They do not require annual meetings and require few ongoing formalities. The owners are not personally liable for the LLC's debts or legal liabilities, unlike the general partnership and the sole proprietorship. So this is why I personally like the LLCs. They're flexible. Um, they limit the business owner's liability in terms of debts and any legal liabilities that may come about. They're less complex to establish and maintain, which is always good for a small business owner, and they require less paperwork than other corporate entities, which is true. And here in Texas, we'll talk about what's required to maintain your LLC. Profits and loss can be allocated differently than ownership interests, right? So let's just say for a partnership, if you have two partners, you may decide to split the profits and losses 50-50. Whatever your agreement calls for, you have that flexibility. In an LLC, if you have more than one member, a part of the LLC, you may have someone that maybe is less active in the business, and you may want to do a 60-40 split. You're perfectly able to do that. So it doesn't have to be along the lines of the ownership interest, how you split the profits and loss. Okay. All right. So next, let's talk about the disadvantages, is what this should say. There's no or more okay, so this is more advantages. No double taxation earnings and losses. All of the profits pass through to the owners. Okay, so this is what they'll call a pass through. A sole proprietorship and partnerships are also passed through as well. Owners can choose how the LLC would be taxed, and this is for federal tax purposes, and it's because the IRS does not recognize LLCs. Remember, I said that this is mainly for states. It's a state statute. So when you apply to get your EIN, you have to tell the IRS how you want to be taxed. If you don't, you'll default as something. So if you're a single member LLC and you don't tell the IRS otherwise, you will be taxed as a sole proprietor, or what they call disregarded entity. If you are a multi-member LLC, and if you don't elect something other than partnership, the IRS will default you um, as a partnership, and you'll have to file the applicable tax returns as a partnership. So you do have that flexibility as an LLC to choose partnership, S Corp, or C Corp. That's another reason why I really like the LLCs, because of this flexibility as well. So you don't have to change your formation at the state level in order to be taxed differently with the IRS. So that's a huge benefit that I really like personally. And LLCs are viewed as a legal entity separate from its individual members or owners. Unlike the sole proprietor that we talked about, there was no legal entity. The business and the owner are one and the same. But for a limited liability company, it is viewed as a legal entity, state purposes. Okay, now on for the disadvantages. LLCs are subject to self-employment taxes on net income. Okay, now I say this is a disadvantage when you begin to make money, right? Because in the beginning, as your business gets off the ground, it's normal for you to have losses the first couple of years as you're funding the business and you're making expenses. You're spending money to get the business up and running. So if there's no profit, then there's no taxes. There's no federal tax, there's no self-employment tax. And so this is only a disadvantage when you remain a Schedule C, or you remain taxed as a partnership, because those two are subject to the self-employment tax. So I always recommend to my clients, if they're consistently making profits, this is after everything, all of your expenses and everything is paid, that it may be time for you to switch to another business structure that can save you money on tax. And it's a tax strategy that many business owners use. But so this is a disadvantage only if you're making profits, you're subject to self-employment taxes on net income. And so LLCs usually require annual fees and periodic filings with the state. I mean, here in Texas, it's not overly burdensome. Um, and you're only going to be paying fees if your gross receipts are above a certain amount. Now, other states may have, like I mentioned with California, annual fees and additional filings above and beyond what's required here in Texas. Okay. LLCs may have to rely on personal assets of its members to fund startup company activities, and that's generally the same for sole proprietorships as well. You know, it definitely takes money to start a business, and a lot of people are bootstrapping. They may be working full time and have their business on the side. So it's just the nature of running a small business. You may have to fund some portion of it, if not all of it, until you're able to make money to invest back into the business. And the profits are taxable whether distributed or not. That's just how the IRS does it. So let's move on to S corporations. The wildly popular LLCs are popular as well, but S corporations, I think, is a close second. So an S corporation is really a federal tax election with the IRS. S corporations must file with the IRS to get approval to be taxed as an S corporation. And it is also considered a pass through. Your income, losses, deductions, and credits all pass to the shareholders for federal tax purposes. All shareholders must be U.S. citizens, and the S Corp members who work in the business are required to pay themselves a reasonable salary. So I always recommend for new businesses right out the gate that's not making any money at all, generally I don't recommend them to elect to be an S corporation because there's lots of compliance associated um, with S corporations, and you really don't get the tax savings or benefits if you're operating at a loss. And again, like I mentioned, the first few years in business, that's to be expected. So some of the advantages of an S corp: shareholders not personally responsible for the business debts and liabilities of the company unless there's a personal guarantee in place. S corps are taxed as a pass-through entity, just like an LLC, so there's no double taxation there. And shareholders who are also employees pay employment tax only on their wages and not on net profit like LLCs. So if you remember when I talked about LLCs, not only do you have to pay self-employment taxes, but you also pay federal income taxes on the profit that you make in the business. So it's not, with LLCs, if you're taxed as a disregarded entity for the IRS or as a partnership, you are not allowed to deduct your own salary. In fact, you don't have a salary because, the IRS considers, whatever profits you take in the business, they consider you having access to all of it and they tax all of it as your salary, whether you take it out or not. So this is a one great advantage of S corps, and there's no self-employment taxes on corporate profit. Okay. And one person can form an S corp. It doesn't have to be multiple people. And you can sell a class of stock to raise money to fund the business. So let's talk about what it takes to form an S corp. So you simply have to submit Form 2553. It's an election, as I mentioned before, by small business corporation. It must be signed by all the shareholders. It must meet the IRS criteria to be eligible for an S corp status. And the IRS will notify you if the election is accepted or not. And the effective date within 60 days of filing. However, this is how it used to be before COVID. The IRS right now is still severely backlogged with processing tax returns from 2020, believe it or not. And to my knowledge, this form is still required to be mailed in. And um, so the mail is backlogged. So I'm advising people if they're thinking about switching over to an S Corp 6 months, 12 months out to file it now due to the backlog with the IRS. Um, Hopefully they can find a way to at least make this process electronic so that people who have filed for this election can get some of the benefits. Because again, you have to have the approval before you can change your election. You can't just go off and do it because if you go off and start filing an 1120S, it'll probably get rejected by the IRS. So I would recommend, if you're thinking about doing it, if you're in a position to do it, um, to go ahead and just mail that form. Once the election is made, it stays in effect until it's terminated or revoked by the IRS. All right, so let's talk about some of the disadvantages. It has limitations to only 100 shareholders or less, and it only has one class of shares that can be issued. That may or may not be a disadvantage. 100 shareholders seems like a lot, but um, if you need more than that, then this may not be the election for you. They have more complex compliance, and it is subject to more IRS scrutiny. And that's only because of the tax savings and the benefits. A lot of times people who, what I've come across is that they're working in their business, they've elected S Corp, but they themselves are not paying, they're not paying into the system via payroll. So that is a major compliance issue, because if you are electing that status, you're indicating to the IRS that you are going to pay into the system, and they're going to be looking for employment tax returns filed for yourself and the rest of your employees on a quarterly basis. So that's another reason why I tell people to make sure that they're able to comply with all of the rules and regulations before switching to an S Corp. All right. So next we're going to talk about C corporations. What are they? They are owned by shareholders and taxed as a separate legal entity. So a C corporation is its own legal entity. You can have multiple classes of stock, unlike the S Corp, it only has one class of stock, and it can have unlimited number of shareholders, unlike the S Corp, which is limited to 100 shareholders. And they can make a profit, they can be taxed, and they can be held legally liable. So, unlike, we talked about the sole proprietorship, if some kind of dispute or legal um, disagreement or dispute comes about, you and the business are one and the same. So you're not insulated. Your personal assets are not insulated. The S corporation is on the other end of the spectrum. It provides the maximum protection. The C corporation is its own person, it's its own entity. So if someone's bringing about some lawsuit, they have to sue and go after only the assets of that corporation and not you personally as a shareholder, as a director, manager, any of that. All right, so let's talk about some of the advantages, which I've kind of alluded to already. Shareholders and owners are protected from personal liability. This can be very important to people, especially if you're in a high risk industry. This could be one of the driving forces of switching to an S Corp or starting out as a C Corp, having that maximum protection. The ability to raise capital. You are able to issue stocks and bonds as a C corporation. You can easily transfer ownership through the transfer of securities. The C corporation has a perpetual life. Unlike the sole proprietorship, if the one shareholder or one owner dies, that the C corporation lives on. You can transfer ownerships. You can sell shares to other people. You can gift shares to family members. So the C corporation has a perpetual life. And it's the best vehicle for businesses that are in high risk or plan to go public. Now let's talk about the disadvantages. It does require annual meetings, and owners and directors must observe certain formalities. They are more expensive to set up than partnerships and sole proprietorships. In some states, like I said, in Texas, we're very fortunate to have that set fee, but other states, not so much. They require annual fees and periodic filings with the state. And some of these things could be burdensome for a small business owner to keep up with if they're not aware of it, if they don't have the staff to do it. Because if you don't comply with some of these things, you do put your C corporation status in jeopardy with the state. I've seen that happen where a person simply didn't file their annual information report. I don't know how many years they let it go by, but the state of Texas can't suspend your right to do business in the state if you don't comply with some of these rules and regulations. Business profits are double taxed. You do have double taxation with C corporations. Shareholders cannot deduct business and losses on your personal income because it's not a pass through. So let's talk about the formation. You want to choose your corporate name. You want to prepare and file a certificate of formation, and the filing fee is the same as LLCs here in Texas. You want to appoint a registered agent. You want to prepare the corporate bylaws. You want to appoint directors, and you want to hold board of directors meetings. Um, I used to do audits for very large organizations with the IRS, and we do ask, or I did ask to see copies of the board meetings, corporate bylaws, and I'm pretty sure the state of Texas probably does the same thing. Texas Comptroller used to do audits for them as well, sales and use tax. And so they expect you to have these things in place. They expect you to follow all of the rules and regulations of a corporation if you're going to elect that status with the IRS and formally file your C Corp with the state. So just keep that in mind. You want to issue stock to the corporation's shareholders, and you can do this on your own, or you can have an attorney help you do this as you set up your C formation, your C corporation. So now let's talk about the state of Texas compliance and license requirements. So here in Texas, we don't have state income tax. Thank goodness. There's several other states that I believe Florida, Nevada, Tennessee, there could be a couple of more that don't require state income tax filings because we don't have them here. But what we do have for corporations and LLCs is the Texas franchise tax. Okay, so every year, May 15th, you're required to file an information return with the Texas Comptroller of Public Accounts, and basically you're reporting on your gross receipts. If those gross receipts are less than $1 million, then there's no tax due. If you've grossed beyond $1 million, then there is a table, uh, franchise tax table that'll apply to and tell you what the tax are due. Now, it is required for you to file. You can't just say, "Oh, well, I didn't make $1 million. I'm not gonna complete the return." You complete the information return. You do have to do it. That's part of your compliance requirement. Because if you don't, you can have that your LLC or C corporation status suspended. So you don't want that. So Texas does not require LLCs to file annual reports with the Secretary of State, but you do have to do that annual franchise tax report, which is due May 15th. Now, if in your business, if you're selling goods and collecting sales tax, you'll need to register with the Texas Comptroller of Public Accounts and either pay monthly or quarterly file your sales and use tax returns. Okay, so when you register your business, you should determine if what you're selling is subject to sales and use tax before you even get started. And if so, you'll get a permit. Or if you're selling something that's going to be used and resold, then you have to get an exemption with the comptroller's office and keep that reseller or manufacturer's exemption on file so that if anyone's ever questioning you as to whether or not you should be charging sales and use tax, you can produce this permit. Okay, so basically what you're doing is you're collecting on behalf of the state sales tax for things that you are selling to the end user. Okay, and so you have to deposit that sales and use tax on a periodic basis depending on the amount. And they'll let you know what that schedule is based on how much you're collecting in a periodic time frame. Okay. So the state of Texas does not require a general business license. However, there may be certain types of businesses and industries that require statewide and or local licenses and permits. So you have to do some research before you get started on the industry that you're in and see what's required in terms of permits and licenses. in either local library, or you check with someone at SBDC and they should be able to help you determine if that's required for your specific industry and business. So now let's talk about federal tax. If you recall, that was one of the key considerations that most people think about when they're choosing or selecting to change their business structure. So for sole proprietors, disregarded entities, or single member LLCs, you're going to file your federal taxes with the Schedule C on your 1040, and that's just basically reporting the profit or loss from the business. Now, it doesn't require a balance sheet, although I like having all three financial statements just because I'm an accountant. But let's just say you're doing this on your own and you're doing your own bookkeeping. It's not required that you have a balance sheet, but you definitely do need a profit and loss statement, because this, with the Schedule C information, is going to be asking about all the income coming into the business and all the expenses of the business. Okay. And then you're also going to be filing Schedule SE, self-employment, which is Social Security and Medicare taxes, primarily for individuals who work for themselves. You're self-employed. You consider self-employed as a sole proprietor or disregarded entity. Okay. And then also, since you're not paying into the system by way of employment taxes, payroll taxes, more than likely, if you're making a profit, you'll need to be making estimated quarterly tax payments. And this is an area that a lot of people are not aware of. A lot of people just, they don't find out until they get a letter from the IRS, quite simply. Some people may not even be aware if they're making a profit because they're not keeping track of their finances, which is very important. So you don't want to wait until the end of the year, April 15th, and you owe $5,000 in tax. And someone at the IRS determines or checks into your account and notice, oh, this person didn't make any estimated tax payments at all, and now they owe $5,000 in tax. You could be subject to penalties and interest. Okay. So the IRS is a pay as you go system. Either you're paying into the system via employment taxes and payroll taxes, or you're making estimated tax payments as a self-employed person. Either way. So if you wind up paying more than $1,000 at the end of the year, April 15th, when you're filing your return, it's possible that you could be subject to penalties and interest for not making estimated quarterly taxes. That's the threshold. So keep that in mind. So for partnerships and multi-member LLCs, you're going to file a partnership return, which is Form 1065, and it's really an information return. You're not generally paying taxes at the partnership level. Remember, the partnership is a pass-through, so those profits and losses are going to pass to each partner when they file their individual tax return. Each partner is going to receive a Schedule K1 from the partnership, and they're going to file Schedule E, which is supplemental income and loss, with their Form 1040. Okay. Partners include their share of the partnership income and losses on their individual returns. I recommend, especially if you have a partnership, that you hire someone to do your taxes for you. As a sole proprietorship, you may be able to do it on your own. But when you're talking about preparing Schedule K1s and filing your 1065 on time, which is due March 15th, 1 month before, generally before the individual return, because there can be some nuances to partnership taxes that you may not be aware of that a tax professional will know how to handle. Okay. So for S corporations, you're going to file an 1120S U.S. income tax return for S corporation. It is also an information return. All the profits and losses are going to pass through to the shareholders. You'll receive, similar to the partnership, a Schedule K1 showing your share of income deductions and credits for you to file on your personal individual return. Okay. And similar to the partnership, the S corporation return is due on March 15th. And this year, I believe the IRS gave 3 extra days. So the individual returns and the C Corp return is due April 18th, 2022 instead of April 15th. So the C corporation, remember I said this is its own separate legal tax paying entity. You're going to file an 1120. All the profits of the corporation are going to be taxed. Um, any profits distributed to the shareholders, that's going to be taxed on your individual return, and that's the part that creates a double taxation. Um, and you're going to file to elect C corporation, which you can do this as an LLC too. I've had someone in the past change their state from LLC to a C corporation, but they neglected to file this form 8832. So I informed them until that's done, you're still going to be taxed or recognized as a disregarded entity as far as the IRS is concerned, unless this form is on file with your new EIN number. Also recommend that as well. I think it's required by the IRS if you significantly change your management structure, that it's recommended you get a new EIN number. Okay. So if you're a C corporation, you want to make sure, if you weren't always a C corporation, that you have this form 8832 submitted along with your 1120. Okay. So that the IRS, that'll indicate to the IRS that you are being taxed as a C corp and nothing else. So next, let's talk about legal compliance with other states. We may have people on here from other states, and if you're registered in another state, you may be subject to state and local income tax and sales and use tax. As I mentioned, here in Texas, we don't have income tax here, thankfully. Also, other states may have filing requirements. You have to check with the Secretary of State. That's the first place I would send someone when they're thinking about forming a business in the state for the first time. There, they should have all the fees listed, all the forms required, all the requirements needed to get your business registered as a LLC or C Corp. Generally, there's some states that recognize S corps. Texas is not one of them, but I do believe North Carolina recognizes S corporations. Um, but again, for the federal level, the IRS does not recognize LLCs from any state. So you have to tell the IRS how you want to be taxed, or else you'll be defaulted to either a disregarded entity or a partnership if you have multi members. All right, so now that we're wrapping up here, just to summarize, selecting a business structure is not a one size fits all. And you'll find that you may start off as one business structure, but as your business grows, as your business change, if you take on an additional partner or new people come in, that you will need to change that structure. So it's helpful to know a little bit about all of them so you can make the best decision, right? And you want to keep these top considerations in mind: ownership. If you bring in an additional partner, then you'll really have no choice to move from sole proprietor to partnership. But if you're thinking about how you're going to be taxed, if you're thinking about avoiding self-employment taxes, then you may move straight to being taxed as an S corp for that additional savings, 15.3% on self-employment taxes. Again, if you have significant assets, you're bringing in partners that may have significant assets that want to be protected, then a general partnership may not be the best option in terms of protecting those assets from legal liability. right? So you may want to move into a multi-member LLC, be taxed as an S-corp. You have so many options. And setup, starting out, you may want something easy, not complex. You don't want to have to worry about a bunch of filing. So a sole proprietorship may be the option for you starting out. As you're making more money, as the business grows, um, you may want to change that. Okay. And then again, tax implications. You always want to know for each business structure what forms you need to file, when the deadlines are, you know, how you can save on taxes um, by changing the structure as a strategy when the right time is to do that. Okay. And just know that you can change your structure during the life cycle of your business. It's expected, but the IRS is not going to tell you that. The IRS is not going to come in and say, you know what, you're paying us too much taxes. I recommend that you be an S corp. They're never going to do that. So it's up to you to know these things or get connected with an accounting and tax professional that can advise you on when the right time is to do that, to minimize your taxes, right? To mitigate risk if that's what's really important to you. And for certain, if your ownership changes, then you have to not just consider what's important to you, but what's also important to the new owners that's coming into the business as well. Okay. And that is all that I have. I am ready for some Q&A.
Okay. Well, if you have questions, please put them in the chat room. In the meantime,
Paula, is it okay if we ask questions as well
sure, go ahead. That'd be great.
instead of the chat room?
That works even better, Roger. You're right.
Okay. Um, that was really good. Thank you, Angela. It was
Hmm.
really comprehensive, so appreciate it. Quick, I have actually three questions.
Hmm.
My first is with the 1065 on filing 1065, you said that we're paying an additional 15.3 self-employment tax on that.
Hmm.
Is that
Hmm.
correct? So
Yes.
when we have a 1065, and we've made, let's say at the end of the year, it brought us that $1,000 of income, right? And so we report that on our tax return. So in addition to paying the normal tax for my tax bracket on that $1,000, over and above that, there's an additional 15.3 self-employment tax, correct?
That is correct. That
Okay,
is correct. Yes.
just making sure that I walk through that, understand that. I think that that's a point that I think a lot of people miss.
Yeah, it is. And a lot of times people are shocked, not shocked, but they don't understand that it's a difference from the federal tax and the self-employment tax. And so if you're a W-2 employee, you miss that. So you're essentially paying your FICA and you're getting your federal taxes withheld each time you get a paycheck cut. So because you're self-employed and you're not going through that payroll process, then this is the IRS's way of allowing you to pay into Social Security and Medicare by that 15.3%, you know, um, filing Schedule SE,
Yep.
basically.
Another question was moving in or out of Texas, just because we're here in Texas. So kind of moving in and out. Do you have an opinion on people if they should keep their same organization that they formed, let's say in Colorado, if they're moving here to Texas, should they keep that same and just adapt, or should they, forfeit that LLC or whatever they form there and form one here?
It really depends because I had a client that moved from Maryland to Georgia and she was not going back to Maryland. For all intents and purposes, she was going to be a resident of Georgia. And so she opted to not have a foreign entity because that, I believe, was an option for Georgia. She had her LLC is converted to the state of Georgia. Now, it just really depends on the individual, because you still have to have that registered agent, and that registered agent needs to have nexus there. So if you were your own registered agent and you've moved from that location, then you would have to either get another registered agent that's still in that state, or you would have to convert the LLC or the C corporation, or file to get a brand new one, dissolve the one in the previous state. So that's a consideration. Now,
Yeah.
some people, depending on what those filing fees are, if they look at how much it costs to operate a foreign, and I say foreign, but it means it's from another state. You registered as an LLC in another state, but you're operating in the new state. Now, if those fees are low and it's the requirements, it may not be such a big deal to, keep it. And if you have a presence, or if you have a registered agent back in that previous state, then it just really depends on your situation, your personal situation, if you want to convert that over to the new state where you are.
Yeah. Yeah. I think you're right. It's a real individual decision on some of that stuff for sure. And then my last one was sometimes we get questions on, adding members to LLCs or taking them off. Do you have a quick reference that you can kind of give us maybe with regards to that?
Well, definitely, if the members are changing or adding, you definitely want to update that with the Secretary of State, because you want to get that on file. Because you have to list who the members are when you file for that certificate of formation with the state. So I'm sure there's probably a form to do that, since that's, things like that happen. People leave, or, if it's an LLC, you can transfer interest, and I'm sure they want to know who that new person is. So I'm sure with the Texas, I can't think of the name of the form right now, but I'm sure you're going to have to update that new member with the Secretary of State, so they have a updated version of who all the members are of the LLC or the C corporation.
Okay, gotcha. Thank you.
Mm-hmm.
See, if your business was an LLC, and is there a time that you might change that to a DBA, like step away from the LLC?
Um, so now you can have an LLC and operate as a DBA.
Mhm.
So you don't have to, you can file your LLC as one name, but have your business operate under a DBA. You certainly can do that. Yes.
Sure. Okay.
Yes. You certainly can do that.
Um, and how often does the LLC have to be renewed?
Well, you just have that annual franchise report requirement every May 15th, but once you pay that fee one time, that's it. You don't have to pay it as long as you stay in compliance with filing those fees. Unless you terminate it or convert it to a different state, then you won't have to pay another fee
Gotcha. Okay, that's good to
here
know.
in Texas, but every state is different.
Somewhere else, okay. That is good. A good explanation. I do appreciate that.
hmm
Um, Now you talked about the meeting, the documentation, all of that required with the C Corp. Is there anything like that required with an LLC?
Not technically. Generally, that's a requirement for C corporations. They're looking for you to have bylaws and annual meetings and directors. Now, LLCs, you can have members, usually the members are the owners, or you can appoint managers who may not be owners at all of the business, but they're managing the day to day. So I have not come across any IRS requirement for annual board meetings or things like that. Now, when um, I've gotten certified for different like government certifications and corporate certifications with the city here in Houston and Hub with the state of Texas. They do ask for a copy of at least one board meeting. And if you're the only person, I usually suggest and have recommended to others, then you put your thoughts on paper. You put your thoughts about your business plan, what you plan to do, or let's say, for instance, you decide to open up a new bank account. You type up a memo, put your name on it because you're the only person in the business, and then you just stamp that and give it to whoever's asking for it. So it's very informal for LLCs, but for C corporations, that formality is expected, for
Mhm.
C corporations.
Um, okay. In a situation where you have a group of people that are involved in, I, well, I don't know if you'd say, I don't even know how to ask that question, so I'm not going to ask it. It would just be confusing if I asked that question. Uh, are there any other questions that are confusing? Um, let's see. Brett is asking, where, Brett, you want to unmute?
I'll do it. Yeah, I figured by then we lost the trail of what we were talking about, but I think you actually answered it, but where do we go to report the annual LLC franchise fee?
The Texas Comptroller's website.
It's all on the comptroller's website, so they can
Right.
find a link there, right?
Right. It'll say franchise annual report because
Okay.
it's required of all LLCs. You
And they,
should have, when you filed your certificate and got your certificate of formation, they should have given you like a web ID number mailed to you. Now, some states are different. I know in Georgia you have to apply for these things, but here in Texas they do give you a web ID number. You use that ID number, it's going to be associated with your LLC or your C corporation.
great. Thank
And
you
you can
so
do
much.
it right online. And it's a very short document. I'd say it probably takes less than 10 minutes to complete.
Fantastic. Thanks.
Okay. Uh, anyone, any other questions? Well, do you have anything you would like to add before we completely wrap up here? Angie?
Um, just you know, encourage people to reach out and get assistance before switching to a structure and they're not really sure, what the requirements are. What I find most is that people they hear about S corps and they just think they automatically should be one. And and they don't really understand the requirements. And a lot of times people are not on payroll like they should be, and they're not paying the quarterly estimated taxes either. So that's like a big a big no-no because they're heavily scrutinized. Heavily. When I used to work for the IRS, S corps was like the number one thing because they know it's abused a lot because people aren't really aware of the requirements. And as I mentioned, starting out, if you're not making profits, the S corporation is not really going to benefit you. If anything, it's just going to put more of a burden in terms of complying with the rules and regulations of an S corp. So it's really only beneficial after you start to make consistent profits in the business and can afford to put yourself on a salary, and then you can begin to pay into the system via employment taxes.
Okay. We do have a question that has come up. Is there a place that you can find all of the requirements for all of the different structures? Would that be the Secretary of State?
Yes. Well, for terms of IRS, yes, you can go to irs.gov and under small business, self-employed, they will tell you under each business structure what's required, the forms, all the compliance, and there is a short video. It's an older video, but it's still very relevant. They have for small businesses on business structures as well.
And then the Texas Secretary of State, or SOS Direct, has a lot of information as well.
Right.
So, well, okay. I thank you so much for all of this information. It has been just fantastic. Answered a lot of questions that I had. So thank you so much for joining us, Angela. Look forward to having you back.
Absolutely.
So I've just put up on the screen our upcoming webinars. We have quite a few. This week we have 2 double headers, and I don't know, next week we might have 2 double headers as well. Tomorrow we have the continuation of QuickBooks, the part 2 of Intro to QuickBooks Online. Then in the afternoon, we have using government debt strategically, a very, very interesting topic, especially after all of the government money, the COVID relief money that has gone out. Then marketing your business from the driver's seat on Thursday morning, and team decisions, how to get them right, from Lorna Kibbe. Another in her series, really great information. Then next week, next Monday, we have Intro to Filing for Small Businesses from Rebecca Schultz, and we continue our getting ready for income tax season with Angela coming back for business owner tax responsibilities. I want to thank you all so much for joining us. You can go to our website there at sbdc.nctc.edu and register for all of the webinars. You can get contact information, take advantage of the resources we have online, and schedule an appointment with an advisor. We'd like to thank you all for joining, and we are grant funded, as I said earlier, and we'd like to take a moment to thank those that do support us: the Small Business Administration, the state of Texas, North Texas SBDC Regional Office in Dallas, and the North Central Texas College, our host. Thank you all for joining us today, and we look forward to seeing you tomorrow. And this will end the webinar. Thanks so much.